Despite Africa's private equity industry still being in its infancy, investors are looking for opportunities arising from the high economic growth rate on the continent. And Beatrice Kachenge spoke to Stephen Constabile, who is Global Head of Private Funds at PineBridge Investments, for more.
No, I think when we look at the opportunity set in Sub-Sahara, at the moment, we think that for 2013, that number should be 15–20% higher than last year. So we have a lot of momentum in the region. There's a lot of good skill sets on the ground operating, and we think that momentum and that trajectory is going to continue.
But why are we seeing this interest in Sub-Saharan Africa?
Well, it's interesting. Institutional investors around the globe have a desire to find growth for their portfolios. They have actuarial assumptions that they have to meet because their liabilities are growing at a certain rate. And so as they look out into the world, and especially for those operating in the developed markets, they see that their growth rates are anywhere between 1% and 3%. They have looked to China, they have looked to Brazil, and both of those opportunities are somewhat challenged. They have looked at the rest of Latin America, but they say, what's next? Where else shall we go? Where can we find growth? And certainly from PineBridge's perspective, again, we operate in many global emerging market economies. We have said to them, you should consider Sub-Saharan Africa based on the demographics, based on the opportunity set, the skill sets that are operating here. And we have a very unique perspective because we have an office right here in Nairobi that has been very active since 1998, looking at listed equities and fixed income. And so it's a natural extension of our relationships to bring our global clients and potentially local investors into the opportunity set. But that's really the driver. It's the desire to find growth.
Okay. Looking at it from the perspective of your company, how much do you have set aside for Sub-Sahara in terms of private equity opportunities?
I would say as we talk to our global clients, because again, for us, we have relationships with institutional investors worldwide, and we make recommendations for them on their global portfolios and how they should allocate. We believe on a well-diversified global portfolio, one should allocate between 10 and 15% of their overall allocation to Sub-Sahara.
And as PineBridge, how much then are you forecasting probably in this financial year?
Well, I think for us, it all depends on how much we allocate from our own resources, how much we have from our global client base. And then we always have alignment of interests with our clients by investing alongside them in the regions that we take them to. So we think that's very important, especially in the private markets, to have that alignment of interest with our clients.
Okay. Looking at Africa, private equity is still at its infancy because we are
Yes.
seeing it it's one of the lowest if you look at some of the matured markets. Maybe you can put it into perspective. How is the industry in Africa faring if you compare it to other markets?
Well, I think it's twofold. One, the potential for outsized disproportionate returns on the positive side are quite evident. In addition, how much room does it have to grow? Well, to your point, as a percent of GDP across the Sub-Sahara economies, it's almost negligible, which means there are a vast room to grow and see those returns, as opposed to other emerging markets who also have great potential, but their exposure to private markets relative to GDP are 4, 5, 6 times as great as Sub-Sahara. And so for us, when you look at the vibrancy of what's happening in these regions, in East Africa specifically, and look at the penetration of private equity relative to the size of their economies, there's a lot of potential here, and we're quite excited about it.
Sub-Sahara has about 46 African countries. For you, which are some of the darling hotspots that you're eyeing?
Well, I think what's intriguing to us, and we think there's a lot of potential across Sub-Sahara, but the conjunction of countries in East Africa and the cooperation, the lowering of tariffs for trade across the region, the dynamism of the economies, the regulatory regimes that are very favorable for business development. and the skill sets to execute private equity investments, to find opportunities in growth businesses, to help with generational change, to help put in equity capital for fast-growing businesses that can no longer rely upon traditional lenders. It's a great opportunity there, and that's where I think a lot of our focus will be. If you look at the capital formation to date, one might say in Sub-Sahara, one might weight 40 to 50% of their capital to South Africa. We're going to allocate about half that to South Africa because we're very confident in the skill sets and the opportunities that we see across the rest of the Sub-Sahara region.
And looking, of course, from a perspective of the fund, you have about $180 million set aside for Sub-Sahara. Do you plan on increasing that and maybe, diversify the scope to other sectors? Because I know you're heavily in financial and banking sector.
Well, I think for us, we'll see as the opportunity set evolves. What we've learned about our exposure to emerging markets is that you can have a point today and think you'll allocate a certain way, but especially in markets that we see here, the opportunity set's growing rapidly. And so right now we're tracking roughly 40 skill sets on the ground across Sub-Sahara, but in 18 months that could be 60 skill sets. And so the amount of capital we apply will be determined based on the opportunity set given at the time that we're allocating capital. So
do you have a number, like the number of deals you'd like to have by the close of the year?
I think I'd like to see how that pans out first before I commit myself to a number. But I can say that we believe there is a great potential to be quite active.